Great time to check in with Tom Lee, head of research at Fundstrat, chief investment officer of Fundstrat Capital, as well as a CNBC contributor. You weren't really impressed with June that much in terms of the averages kind of stalling out, and you expect July to be better as valuations are more reasonable and sentiment is not crazy bullish. Does that sum things up?
Yeah. I mean, July we're going to get Q2 earnings.
Right.
And in the first quarter, earnings came in way better than expected. And so the market's PE is actually lower now than it was in January by 1 point, one full turn. And I think second quarter earnings are going to surprise to the upside again. So the market's going to get cheaper again. And that means there's room for PE to expand. So I think July is going to be a stronger month for stocks.
8,000 is doable this year.
Yes.
On the S&P.
Yeah. And because 8,000 would be roughly 20 times 2027 earnings of 400. I think that's a low estimate. I think the PE multiple could be 22 or better. So that would be, even 84, 800 kind of would be the upside into year end. But I do think between now and year end, there should be, something that might feel like a bear market too. Not in July, but maybe, between August and October.
Why not in July?
Well, I think for the things Joe cited, that June wasn't a great month, and I think there are a lot of fund managers trailing the benchmark this year. Only 23% of fund managers are beating the large cap growth index. That's the lowest number in almost 5 years. So, I think there's going to be a lot of dip buying this month.
What do you mean? It feels like a bear market. Does it go down 20%?
It might.
And what average? Are we talking about the NASDAQ or the S&P?
I think both. This year, the February to April decline felt like a bear market, and that was only 7%. But I think, in later this year, we have a few things that will test the market. One is the market is going to test the new Fed because he has a new framework and a new way to look at inflation, and we know that there's going to be a gradual unlock of the SpaceX shares, and that's a headwind. And I do think, there is going to be a cumulative shortage of petroleum products, so that's a headwind. And I think margin debt's kind of high. So I think 4 things that could unravel in a way that might feel like a bear market.